Welcome to the special edition of the Consumer Finance Podcast. I'm Taylor Jess, an associate in Troutman Pepper Locke's Consumer Financial Services Regulatory Practice, and I'll be your guest host for today's episode. Today, we're going to be giving you another installment of our special highlight series on point-of-sale finance, where we will discuss state licensing issues, point-of-sale finance provider space. But before we jump into that topic, let me remind you to visit and subscribe to our blogs, TroutmanFinancialServices.com and ConsumerFinancialServicesLawMonitor.com. And don't forget about all of our other podcasts we have, the FCRA Focus, all about credit reporting, the Crypto Exchange, about crypto and digital assets. We have Unauthorized Access, which is our privacy and data security podcast, Payments Pros, and of course, Moving the Metal, our auto finance podcast. All of those are available on all popular podcast platforms. Speaking of those platforms, if you like this podcast, let us know. Leave us a review on your podcast platform of choice and tell us how we're doing. Now, as I said, today's episode is another installment in our special highlight series on point-of-sale finance. Here I'm joined by my colleagues Joe Riley and Paul Bowler to talk about the role of state licensing and providing point-of-sale financing. Joe, Paul, welcome to the podcast.
Thank you, Taylor. Pleasure to join you.
Glad to be here.
So I understand today you both are going to walk our audience through some of the licensing considerations as they relate to the various point-of-sale finance products we've discussed on earlier podcast episodes. Do you want to start by helping us understand what we need to think about with regards to state licensing and a credit sale program?
Absolutely, Taylor. Thank you for having us again. I want to start off when we're talking about licensing generally, we're really talking about the activities of non-banks. Banks are only subject to licensing in very unique areas. So we're going to be focusing on non-bank activities since non-banks don't enjoy those exemptions from licensing. Just starting at a very basic level of POS financing, let's talk about the model where the seller is simply offering retail installment contracts to the buyer. That is an activity by sellers that is very lightly regulated from a licensing standpoint. Almost no states require a seller to obtain a license before offering sale through a retail installment contract or a RIC. There are a number of states that have adopted the Uniform Consumer Credit Code, the UCCC, that do require sellers simply to file a notification before engaging in that activity. But a notification doesn't include an approval process. It's just, you just file a notice and you've complied with the law. So there are about 11 UCCC states, and most of them do require that. Very important when talking about sellers offering RICs is that there are two special categories in the licensing world, and they are exceptions to the general rule I mentioned that sellers offering RICs is lightly regulated. Those two exceptions are for either vehicles. Some states have a retail installment code that is specific to motor vehicles. And the second exception is home improvement, construction, and services. Again, some states, in addition to their general Retail Installment Sales Act, have a code specifically for when home improvements are sold that way.
Joe, earlier you mentioned the difference kind of between a notification and a license. Are you able to explain a little bit more about the differences between those two?
Yeah, thank you, Taylor, for asking me to expand on that because it is a very important distinction. A license is a much heavier lift than a notification. A license generally calls for some intensive background information from the applicant. A lot of licenses, the application requires fingerprints, it requires a credit check, an FBI background check. Sometimes even there are net worth requirements. And the application is subject to approval or disapproval by the regulator. And you don't have a license until you've been approved. Sometimes the regulator might have questions and that drags the process out. So that's a license. That's a heavy lift. A notification, much lighter lift. There's no approval process. The form that you fill out is generally much simpler. There are no background checks or anything like that. And once you file the form, you're done. You've complied with the law. There's no process of waiting for the regulator to judge the sufficiency. As long as you filled out the notification completely, provided minimal information, you're done with the notification. We've talked now about sellers offering RICs. I'm going to turn it over to Paul Bowler for some additional activities by sellers in the point of sale space?
Yeah. So in addition to being able to, provide the goods and services on credit from the sense of an installment plan, the other options sellers can go down is to provide a lease or provide a rent to own. So from the consumer standpoint, those may not be much different, but in a traditional lease, there is not necessarily the assured outcome that the consumer is going to own the product at the end of the agreement, though oftentimes the agreement will have some sort of option at the end for the consumer to purchase the good. However, with the rent to own, that's kind of built into it. It's not necessarily they have to purchase it, but the plan is for them to pay a certain amount of payments, and at a certain point in time that they will acquire ownership in the good. And those, from the lease side at least, states don't tend to require licenses or notifications for sellers, in this case, to provide a lease model. However, the rent to own, there are some states that do require licenses for that type of agreement.
Thanks, Joe and Paul. So we've talked a lot about licensing as it relates to sellers of goods. So what if a seller does not want to hold that contract for its entire life, or if a third party wants to get involved in point of sale financing? What would those, third parties, whether it's a sales finance agency, a fintech, or so on, need to think about with respect to state licensing?
When we talk about a seller that does not want to hold the risk of the buyer not repaying, there are a couple of options. Before we get fancy, let's talk about a very common option that you alluded to, which is where a third party comes in to buy the RIC from the seller, usually immediately after the seller and the buyer sign their contract. The contract is immediately assigned to a third party. In this case, we usually call the third party a sales finance agency, and that third party will then collect the monthly payments from the consumer over the time of the retail installment contract. It's kind of ironic that we mentioned that there's relatively little licensing for a seller that wants to offer a RIC. There is actually more licensing for a third party that buys the RIC from the seller. That is more licensing of these sales finance agencies. There are actually quite a number of states that require a license to buy RICs from a seller. So that's one kind of simple option, and those sales finance agencies need to be licensed by a number of states. Another point of sale model that also involves licensing is what I'll just call the bank model. In the bank model, we actually have two third parties in addition to the seller. We have a non-bank facilitator, often referred to as a fintech, which has entered into a partnership with a bank. And in that partnership, the partnership will offer the seller an online platform that the seller can direct any buyer that's interested in financing to. And then on the platform, the buyer can apply for financing. Now, the financing will be provided directly by the bank. So the financing contract will be between the bank and the borrower. But the facilitator who works in partnership with the bank often will need a broker license, since the fintech is effectively brokering the loan that the bank is going to make to the buyer. There are a number of states that require broker licenses. In some states, that actually falls under the lender licensing rubric. So that is sometimes referred to as lender licensing, even though the actual lender on the credit contract is the bank. And then when it comes to collecting this bank loan, the facilitator that is partnered with the bank often will engage in collection activities. And a number of states do require collection agency licenses, even though the facilitator is not a traditional quote unquote debt collector that only gets involved after default. These are facilitators who are collecting from inception of the loan, but a number of states do regulate that activity and will require a collection agency license. Paul, do you want to talk about a more direct lending option for point of sale financing?
Absolutely, Joe. For third parties, in addition to what Joe just described, a straightforward method could be for the third party to directly lend to the consumer and provide a loan at the point that the consumer checks out or purchases the product or service. Now, this is a very traditional area of state regulation. Many states require licenses for a third party to provide a loan to a consumer. The, if you will, triggers for these licenses vary. It can depend on the amount of the loan. It can depend on the term or the interest rate. And so how the loan is made or, the terms of it will greatly impact whether the third party needs to be licensed. But this is a very traditional area of regulation, and many states will require a license in order to provide a loan to a consumer in this model.
Yeah, and to be clear, when we're referring to direct lending, the direct lender is always, in our verbiage, a non-bank. That's why it would need the lender license.
Yeah, that's right. A bank could be a direct lender too. The licensing implications for a bank just differ, right?
Right. Yeah. As we discussed at the outset, banks are exempt from virtually all state licensing regimes in the consumer finance area. National banks generally don't need to get licensed as a matter of preemption. And then by statute, virtually every state licensing regime goes through the trouble of exempting state chartered banks as well.
That's right. And Joe, I think there are some laws where even if a bank might be exempt from licensing requirement, there could potentially be other substantive obligations. Is that right?
Absolutely right. So I'm the licensing guy, so I tend to focus on licensing, but banks are not exempt in a number of cases from substantive requirements that a state will impose on the financing. I've just been talking about licensing obligations. I will say it's particularly true that banks may need to follow substantive lending laws in those UCCC states that I mentioned. There are 11 or so, and they are notorious for not exempting banks from some of the substantive lending requirements.
And Joe, it's probably helpful to remind our folks who are listening from the bank perspective that even in states that do, while they're mostly exempt, there are a handful of states that have some sort of verbiage that could potentially require them to apply for an exemption. So they should be aware of those sort of requirements.
That's true. To get granular, while state chartered banks are exempt from virtually all licensing regimes, some of those regimes do have kind of funky requirements where even though the bank is exempt, the regulator expects the bank to file a sort of notice of exemption, basically just to get the bank on file and the regulators. But so the regulator can track who's in the state and not in the state.
Yeah, Paul, that's a really good point. I think with respect to state licensing in general, all of the licensing triggers and where you end up with respect to needing or not needing a license is really can be a tricky product specific and product structure specific decision. It's not just a blanket yes or no.
Absolutely. And if you know what your business model is, in some cases, there's places where you will be able to operate without a license, and there's other places where you'll need that license. But you're correct to highlight that it's very product specific, not just, I'm offering a loan, I need a license. It depends on, what's your interest rate? What's your term? And that can be said for many other products.
Joe and Paul, we've done a great job introducing the audience to some state licensing implications in the point of sale finance space. So let's leave this special series here for now, and we'll pick back up with another very interesting topic on our next episode for the Consumer Finance Podcast. In the meantime, thanks to our audience for listening today. And don't forget to visit and subscribe to our blogs, troutmanfinancialservices.com and consumerfinancialserviceslawmonitor.com. While you're at it, why not visit us on the web at troutman.com and add yourself to our Consumer Financial Services email list. That way, we can send you copies of the alerts and advisories that we send out, as well as invitations to our industry-only webinars that we put on from time to time. And of course, stay tuned for a great new episode of this podcast every Thursday afternoon, and look forward to the remainder of our series on point of sale finance coming soon to your podcast feed. Thank you all for listening.
Copyright Troutman Pepperlock, LLP. These recorded materials are designed for educational purposes only. This podcast is not legal advice and does not create an attorney-client relationship. The views and opinions expressed in this podcast are solely those of the individual participants. Troutman does not make any representations or warranties, expressed or implied, regarding the contents of this podcast. Information on previous case results does not guarantee a similar future result. Users of this podcast may save and use the podcast only for personal or other non-commercial educational purposes. No other use, including without limitation, reproduction, retransmission, or editing of this podcast may be made without the prior written permission of Troutman Pepperlock. If you have any questions, please contact us at troutman.com.